Amid the empty economic calendar, the single European currency is trading sideways. The euro has good stock ahead of a next week that will be full of high-impact events. So, traders are ready for another turbulent week. Clearly, market participants refrain from risky bets, hence periods of the market bursts are short-lived. Meanwhile, the trading week is quietly coming to an end. Investors are moderating their expectations of a rate cut by the ECB in the near future. Market participants revised their bets in light of statements from several ECB policymakers who said that the annual inflation rate needs to decelerate to 2%, so that the regulator softened its monetary policy. Currently, less than 50% of market participants expect the ECB to make the first move to monetary easing in April. Meanwhile, the Federal Reserve is likely to venture into the first rate cut in a more distant future. And the U.S. initial unemployment claims released yesterday proved that the U.S. economy tolerates high interest rates, and for this reason the U.S. dollar is winning favor with investors. In the meantime, the euro is recovering against the US dollar after recent weakness. Support is found at 1.0720, a local low of December. The euro-dollar pair halted its decline at this level and reversed upward. For further growth, the instrument has to settle above 1.08. On this condition, the euro could develop a further bullish move. The bearish scenario will come into play because 1.08 could act as resistance on the way of the buyers. And in this scenario, the price could fall below the local low of December. Crude oil is trying to consolidate following yesterday's jump triggered by the news that Israel and Hamas failed to reach any agreement. Thus, the geopolitical conflict in the Middle East remains tough, threatening further escalation, and the geopolitical jitters pave the way to a rally in the oil prices. However, following a sharp increase, the market needs a local correction. Unless sensational news pops up, crude oil is set to extend its rally in the New York trade. On Thursday, Brent crude surged by 3% to the levels above $80 a barrel. Such a rapid rally exposes speculative activity in the oil market, thus boosting long positions for the Brent benchmark. In the case the price settles above $80 at the end of the week, and the door will be open for a new bullish sequence. However, if the price sinks below 80 closing the New York session, this move could indicate a slowdown in the bullish cycle and the beginning of a range bond market. Curiously, a sharp rise in oil prices did not provide the ruble with support. Nevertheless, the Russian currency is showing the signs of its sluggish reinforcement. The US dollar could not settle in the corridor between 90 and 91 against the ruble. Despite the evidence of speculations on the US dollar, the USD ruble pair is trading at the opening levels of this trading week. It's a good omen for long positions. At least the traders do not cut the volume of long positions. However, to change your trading sentiment, it's not enough to test the level of 93. The instruments need to settle above it. Otherwise, the USD ruble pair might get stuck sideways with the trading range shifting to 90 and 91. That's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon.